You keep hearing about these cloud players with crazy names like Datadog and Splunk. But do you even know what these companies do? What differentiates Datadog and Splunk? Stay tuned to find out. Okay, so this video is going to be useful for two different types of audiences. One audience that just wants to know what Datadog and Splunk do. And I'm going to do that in the first part of the video. And it's important as an investor to know what these companies do. The last half is going to be stock related. Which stock should you add to your portfolio? Stay tuned. All right, guys. So we're going to break down Datadog and Splunk. I'm going to look at each company, tell you exactly what they do, some pros and cons, some strengths and weaknesses of each company. And then at the end, I'm going to break down some finances. I'm going to show you a really cool chart you have to see that's going to compare a bunch of these cloud players. And I'm going to give you my opinion on which stock you might want to add to your portfolio. So I love this Datadog logo, by the way. It's awesome. So what is Datadog? It's the leading service for cloud scale monitoring. It's used by IT operations and development teams, DevOps, who build and operate applications that run on dynamic or hybrid cloud infrastructure. Start monitoring in minutes with Datadog. Splunk. Now, if you've watched the channel, I've had a couple videos on Splunk. I've been buying this for about a year and a half, and it's actually one of my top holdings. It's a leading platform for operational intelligence. Think big data. Customers use it to search, monitor, analyze, and visualize machine data. Now, just on this first slide, there's two things that you can pay attention to. Datadog is only going to be for cloud. Splunk does cloud and on-prem. In fact, they're growing their business right now. They're shifting to more of a SaaS model from an on-prem model, so they've been around a lot longer. And Splunk also does machine data. So think of artificial intelligence. That's a focus area for more complex situations. So Datadog is a new IPO. It's one of the unicorns from last year. Hasn't been around nearly as long, focused solely on SaaS and on cloud. Splunk has been around a little bit longer and does a combination of both on-prem and SaaS cloud. So let's break down Splunk a little bit. Let's go into Splunk. And they provide a flexible solution for customizing algorithms. This is important, and adding data, okay? And what they do, they have core capabilities that provide a foundation for the company to expand into a wide set of corporate functions like security, like compliance, business analytics, monitoring, et cetera. They have a large and active ecosystem of technology professionals, a lot of fanatics actually, which is a good thing to have, a quality thing to have for a company, including professional service consultants and customers that share a wealth of knowledge and custom-built technology add-ons in its knowledge-based portal to augment its own intellectual property or IP. I think that's very important. Their strength really lies in the ability to normalize data for complex correlations across multiple data types. The bigger the company, the more complex the company, the more they're going to be attracted towards Splunk over Datadog. This allows users to trust anomalies, correlations, and patterns detections, and make sure that things are being accurately reported. So they trust the information that they're getting from Splunk is what that bullet's saying. Customers state that the product, while offering a lot of capabilities, is complex, thus requiring specialized skills to effectively use and support the solution. So it's going to cost more to get people trained, to find people that are knowledgeable in the subject. It's also longer and more expensive to implement because of that. And lastly, enterprises looking to use custom complex algorithms to mine data and information contained in disparate log sources. So maybe you have siloed information across different parts of the business. They're going to gravitate towards Splunk over Datadog. Looking at Datadog in the same manner we just looked at Splunk. So I've been buying this stock as well, but I didn't buy it until recently. The COVID-19 situation has exponentially expedited all of these businesses, and Datadog is one of those beneficiaries. What they do, though, is they straddle traditional IT operations and newer DevOps perspectives. They offer a SaaS or software as a service-based solution built on the premise that operations and development professionals all have skin in the game and should be able to measure application performance from any angle. So doing very similar things that we talked about with Splunk. Unified dashboard keeps the practitioner in context when troubleshooting performance issues and integrations for collaboration and notification tools. It actually works. And if you watch the last video on PagerDuty, you'll see Datadog actually on a couple of the different slides. So PagerDuty, Slack, VictorOps, they all supply APIs. APIs are basically plugins that allow these different software solutions to communicate together and share data. Datadog has a large volume of out-of-the-box dashboards. This is important. Out of the box, easy to use, simple to implement, as well as API integrations. Customers noted that the solution gives them more visibility than previous deployed tools, allowing staff members armed with precise troubleshooting data to react faster. An area of increased research and development or R&D spend would be to expand deployment capabilities to provide options for cloud providers and enterprise on-premise requirements. We mentioned earlier, Splunk does on-prem and Datadog doesn't. And yes, the secular growth trend is cloud, and that is the future, but there still is going to be on-premise. There is on-premise now, and there's always going to be some percentage of on-premise. So that's a portion of the business that they're missing out on. And this is suggesting that they could invest some R&D into that area. Because it's a purely SaaS alternative, so this is only a software as a service alternative, Datadog will resonate with IT decision makers that want to free their staff from tool management and support. You think of like an SAP or like an Oracle, their staff is very ingrained in the Oracle community. They have to rely on training. They have to rely on their staff to do all these different support tools, to do PUM upgrades, to do dashboard upgrades, all these different things to keep the system running on-premise. And if it's a SaaS play, it's all going to be plug and play, vanilla out of the box. Datadog is going to work in theory right out of the box and communicate with all these different products. And they do have over 200 different APIs, so this can plug right into things like AWS, like Microsoft Azure, et cetera. So let's just break down and do a comparison of Datadog and Splunk. And this is a really valuable slide. It's going to show you exactly the differences. So on the left, Datadog, the tool does not support multiple types of data formats, which could be a big issue for some companies. So these companies are very different, as you can see already. The Splunk tool does provide support for multiple types of data formats, including XML, CSV, etc. There's just more flexibility that you could do with the data and importing data into the system. The Datadog tool is a type of monitoring tool which is used for monitoring the performance of cloud services. The tool can analyze the performance of servers, database, etc. On the other hand, the Splunk tool on the right is a type of log management tool. It's used for analyzing the data which generates from the machine. The log files can be analyzed then by the Splunk tool. Very different there. Datadog on the left, dashboard used in Datadog tool can be customized as per the requirements. Splunk, there is no option on the Splunk tool for these customizations. The dashboard cannot be customized or changed. So that's actually a huge con for Splunk, and it's actually surprising that they don't have more flexibility. Datadog, the configuration and installation of the Datadog tool are comparatively easy compared to the Splunk tool, and as the tool uses SaaS service for the installation of software, it's, as we mentioned earlier, it's very simple. On the other hand, Splunk, the configuration and installation of Splunk tools are not easy when compared to Datadog. Datadog tool generates alert when there's something wrong in the tool and helps identify the issue in the system. A lot of times what it'll do after it finds something wrong, it'll then take the information to PagerDuty, and PagerDuty will route it to the appropriate people. With Splunk, there is no option of generating alerts by the tool for the system. So it's funny because you actually will see some companies that might use Splunk and maybe even pay for a piece of Datadog to help do that. More than likely not, but I've seen every mix, working in the industry and selling in the industry, I've seen every mix of vendors you can possibly imagine, so I'd never rule it out. There is no option present in the Datadog tool for analyzing the data in real time. Well, that's not good. Splunk, the data can be visualized in real time by the Splunk tool, which helps to properly analyze the data. Data is only as good as the freshness of the data. If it's from yesterday, it might not be relevant. So now we've got a huge benefit for Splunk. You can see there's big differences here, and each company, depending on the business, what's most important to them, what's critical to them, the complexity of the business, you can see the pros and cons of which way you might go. So there is no one leader, like every company is going to use Datadog or every company is going to use Splunk. It's going to be case by case. It's not one size fits all when it comes to this. The implementation of the tool is cheap when compared to other tools like Splunk. The features of the tool are cheap and easy to install in the system. So obviously that's going to be a huge advantage for small and medium businesses. Splunk, more enterprise, larger business, more complex. You're going to see Splunk more often in those larger deals, larger companies. The implementation of the tool is expensive when compared to other tools like Datadog. The Splunk tool features are a bit expensive for installing into a system. The Datadog tool also does not support front-end application. It only supports back-end applications, which might not be good for your business. Where the Splunk tool supports the front-end application, the GUI, the GUI is supported by the tool for the system. And lastly, the Datadog tool always has stability issues because it's not stable with all features because it's still new and there's things that aren't worked out. With Splunk, there really isn't much problem with the tool compared to things like Datadog. It's been around longer. It's much more flushed out. All right, so now you have an idea of what both Datadog and Splunk are, what they do, some pros and cons. Let's look at the financials for each. And actually, it's really good because we just had earnings from both of these companies. So we have a lot of good data to digest and to compare. So let's look at Datadog first. I mean, they're firing on all cylinders. They're growing in an expanding market. Obviously, that's been accelerated from the whole COVID-19 pandemic. They're improving margins and cash flow and also making acquisitions to expand capabilities, which is very important, of course. The revenue increased by 87% year over year. 87% year over year, which is amazing for any company, especially a SaaS type company. It's blowing the doors off. When it reported just recently here, a couple weeks ago, last quarter, the dollar-based net retention rate, the DBNRR, was above 130%. That's impressive because unlike the dollar-based net expansion rate that you see sometimes, this one actually includes the effect of churn, which is important for SaaS. Their billings grew by 55% year over year, which is actually slightly down because of the COVID-19 situation, which means there actually could be a lot of deals that might have been pushed. The RPO, the remaining performance obligation, grew by 82%, and that's usually a strong signal that they're offering competitive products and that they're going to continue to grow. They reported 63% of their customers are now using 2 or more products, and that's important because anytime you have a company like this, you want to cross-sell and you want to expand the footprint. This is up 32% from last year, and 75% of new logos land with 2 or more products. That means when they sign a new deal, they're going to start with 2 products right away, which is a growing number. That means it's succeeding in convincing customers to adopt new case uses for the platform. This is a promising signal that shouldn't be overlooked because it means it's opening up a new market for itself. And lastly, customers with ARR or ARR of $100,000 or more grew by 89% year over year. Those are staggering numbers. Going forward, Datadog is guiding 62% revenue growth for this quarter that we're in right now and 54% revenue growth for the full year for 2020. The growth rate means its valuation will likely continue to defy traditional valuation metrics. It's expensive. We're going to get to that in a minute. Stay tuned. You're going to want to see this comparison at the end, and there's a bunch of other companies in this realm of cloud on this one chart that I'm going to show you, and I think it'll be very helpful for you, so please do stick around. Next, we're going to get into Splunk. We're going to look at some real quick numbers on Splunk. You remember the rule of 40? We did a video a couple videos ago about the rule of 40, and so we're doing the rule of 40 on this one. We're going to do revenue growth plus the FCF margin, so that's 52% for the revenue growth. Their FCF margin was negative 16, which is actually 36%. So obviously that's a little bit lower than what we want because we want 40% or higher. But I believe it's due to a temporary drop in free cash flow, and I think it'll recover once the accelerated shift to recurring revenue subsides. The leadership and analysts, if you listen to the earnings calls, I've listened to the last 2 earnings calls. They're pushing ARR, which is annual recurring revenue, and it's actually 52% for Splunk, which is really good. You can see on this bottom chart, Q1 2020 to Q1 2021, you're seeing a steady growth of total ARR as well as cloud ARR. And this is why the stock has been going up so much, because the analysts and Wall Street in general, they're excited about the shift from on-prem to cloud and how fast that acceleration is happening with their cloud. And we've talked about this before with Adobe when they went from an on-prem to cloud subscription type model. It's very beneficial. There's some really good stories with that. This is a well-built business that's been around a long time. It's got a lot of clients. It's got a lot of fanatics, so to speak, like I said earlier, and they're shifting this into the cloud. There's a lot of opportunity for Splunk to grow. Okay, so which stock should you buy? Let's check out this chart. You guys are going to like this. So this has basically every SaaS player imaginable on planet Earth, and you can see Splunk circled in the blue right here, right next to Fastly, actually, and Elastic is over here to the right of Splunk. You can see that Splunk is not necessarily undervalued, but when you look at Datadog, circled in the orange up top, Datadog is one of the most expensive, one of the most overvalued plays in the cloud arena. The only thing that's really more expensive is going to be Zoom Video at the top. That's way off the charts up there. And then Shopify. You can see Okta as well. You can see Team. You can see Coupa Software, Viva, MongoDB. All these guys are kind of in that overvalued range, anything above that green line. So does that mean you shouldn't buy Datadog? It doesn't necessarily mean that. I think that because these companies up here have amazing growth, you're always going to pay a premium for that growth. So I like Datadog, and if you can get it on dips anytime there's some sort of correction in the stock, I think it's one that you can probably play long-term and dollar cost average into. Splunk is a much better price right now. So if you were saying, which one should I buy right now at today's prices? Well, Splunk is probably more attractive. With that said, Datadog could definitely be worth, way more than Splunk in 5 years because it has more growth potential. So you're paying a premium for it. So I own both of these stocks. I own more Splunk than I do Datadog. But there you go. There's a kind of a bird's eye view of all the different. So if you're looking for undervalued stocks, you can see Yext down here, which I did a video on. There's a few different ones, a couple of them that maybe you never heard of. In fact, there's a couple on here that I've never really looked into. So the channel will continue to grow and we will continue to explore the cloud universe. I hope you enjoyed this video. I had a lot of fun making it. I have both of these stocks in my portfolio. Take a look. They're both pretty expensive. Honestly, at this point, Splunk is probably the better value than Datadog, but I like both of these stocks long-term. When I say long-term, I'm talking 5 or more years, unless the story changes, of course. If you haven't subscribed, I'd really appreciate if you click the bottom right, hit the subscribe button, and there's that little bell, and that bell allows you to get notifications. So when a new video comes out, you get an email and you can come check it out. We also have a Facebook group. Go ahead and go on Facebook, type in Fired Up Wealth. Thanks again for watching. Have a great rest of your day. Take care.